Hi friends, myself Subrata Mukherjee and you are viewing my channel Dr. Subrata Mukherjee Distance Learning in Commerce. Today I am going to discuss another problem on dissolution. This is lecture number 4 on the chapter dissolution and lecture number 15 in partnership account. In dissolution we have a piecemeal distribution when the partnership firm is dissolved, and the method that we have adopted here is the surplus capital method. The following is the balance sheet of Messrs. X, Y and Z, a partnership firm as on 31st December 2021. On the liability side, we have sundry creditors 10,000, bills payable 6,000, capital account of X 31,000, capital of Y 20,000 and capital of Z 6,000. On asset side, we have cash at bank rupees 1,000, sundry debtors 42,000, fixed asset 30,000. Total of asset and liability side 73,000. The profits and losses are divided in the ratio of 3:2:1. The firm was dissolved and on 31st December 2021, and the assets were gradually realized and distributed amongst the partners on a piecemeal basis. The following are the realizations made during January to March 2022. In January 2022, rupees 20,000, February 2022, rupees 21,000 and March 2022, rupees 40,000. Prepare a statement setting out the progressive distribution of cash among the partners. First of all, we have to prepare the statement showing surplus capital. So we have to prepare a statement, that is the statement showing surplus capital on the basis of profit sharing ratio. So I have prepared the first column as particulars, then partner X, Y and Z. So the first point is the capital as on the date of dissolution. So from the balance sheet you can see that capital of X was rupees 31,000, 20,000 is the capital of Y and 6,000 is the capital of Z. Next point is you have to write the PL ratio. So what is the PL ratio given in the question? That is 3:2:1. Third point is the base capital. How the base capital is calculated or computed, and this is denominated in rupees. So you need to divide point number 1, that is the capital of the individual partner, divided by the PL ratio, that is point number 1 by point number 2. So you will get 10,333 of X, 10,000 is the Y, value of Y, and 6,000 is the amount of Z. So which one is the base capital, the minimum of these three amount? So you can see that 6,000 is the minimum amount. This will be taken as base capital. So point number 1 is the capital as on the date of dissolution. You have to write first. Then in point number 2 you need to write the PL ratio. Then you have to calculate the base capital. So base capital is the minimum of this three amount. So this amount is calculated by dividing the capital by PL ratio. Then you have to calculate the relative capital. So relative capital is computed by multiplying the base capital computed in point number 3 with the PL ratio. So point number 3 into point number 2. So 6,000 into 3 is rupees 18,000. 6,000 into 2 is 12,000. And 6,000 into 1 is rupees 6,000. Point number 5 is the surplus capital. And the surplus capital is the difference between point number 1 and point number 4. So 31,000 minus 18,000 is 13,000. Then 20,000 minus 12,000 is 8,000. And 6,000 minus 6,000 is nil. So you have a surplus capital of X and Y. So again, this process will be done. So in point number 6, you have to write the revised base capital. So here I am writing revised base capital. So this is done. This is point number 5 by point number 2. So 13,000 by 3, you will get 4,333. 8,000 by 2 is 4,000. So this is the surplus capital that you have computed. That is the difference between the capital and the relative capital. And in point number 6, we have calculated the revised base capital, which is calculated by dividing the surplus capital by PL ratio. Now, the revised base capital is the minimum of these two amounts. So 4,000 is the revised base capital. And in point number 7, you need to calculate the revised relative capital. So revised relative capital is computed by multiplying point number 6 into the PL ratio, that is point number 2. So 4,000 into 3 is 12,000. 4,000 into 2 is rupees 8,000. So revised relative capital I have computed here by multiplying this revised base capital, that is 4,000 into 3, 12,000, 4,000 into 2, rupees 8,000. So last point is the absolute surplus capital. Absolute surplus capital. Now this is computed by subtracting point number 7 from point number 5. So point number 5 minus point number 7. So 13,000 minus 12,000 is rupees 1,000 and 8,000 minus 8,000 is nil. So the absolute surplus capital is rupees 1,000. What does it mean? So when the amount will be realized by selling of the assets, after paying off the creditors and the bills payable, first partner X will be paid rupees 1,000. So whatever amount will be left, then it will be distributed to partner X and Y in 3:2 up to 20,000. So first 21,000 will be distributed among partner X and Y in 13,000 and 8,000. So 1,000 will be distributed to X first, which is the absolute surplus capital. Next, 12,000 and 8,000, that is 20,000, will be distributed to partner X and Y in the ratio of 3:2. Thereafter, X, Y and Z will be distributed. The amount will be distributed among X, Y and Z in the ratio of 3:2:1 until the entire amount that is collected from realization is disbursed. So this is step number 1. So step number 1 is the statement showing surplus capital on the basis of profit sharing ratio, and these are the 8 points you need to remember. So first of all, you need to write the capital as on the date of dissolution. I have written in point number 1. Then you need to write the PL ratio. Then the base capital is computed, which is the minimum of the 3 amount. Then the relative capital is computed by multiplying the PL ratio with the base capital. Then we will get the surplus capital. That is the difference between the capital and the relative capital. So we will have a surplus capital. Then we have to calculate the revised base capital by dividing the surplus capital with the PL ratio. You will get the revised base capital, which is the minimum of the two amount computed in point number 6. Then we have to compute the revised relative capital, that is the multiplication of the revised base capital with the PL ratio. And the point number 8 is the absolute surplus capital, that is the difference between the surplus capital and the revised relative capital. So I have already told you the significance of computation of the absolute surplus capital and the revised relative capital. So first of all, partner X will be paid rupees 1000. Then partner X and Y will be paid up to 20,000 in the ratio of 3:2. So in excess of 21,000, that is 12,000 and 1,000, first will be disbursed to X and 8,000 to Y. So if you add up this three amount, you will get 21,000. So after payment of rupees 21,000 to X and Y, whatever amount is realized thereafter will be distributed among partner X, Y and Z in PL ratio, that is 3:2:1. Next, here I have prepared a table statement showing distribution of cash. So in the first column I have written the particulars, then amount. So this is the gross amount we are going to write. Then the amount of sundry creditors, bills payable and capital of X, Y and Z. So we have a balance brought forward of sundry creditors is 10,000. 6,000 is the amount due to bills payable. 31,000 is the capital of X on the date of dissolution. 20,000 is the capital of Y and 6,000 is the capital of Z. On 31st December 2021, we have a cash balance of rupees 1,000 on the date of dissolution. This will be distributed between sundry creditors and bills payable in the ratio of 5:3. So we have to distribute, to be distributed between sundry creditors and bills payable in 5:3. So 625 and 375 will be distributed to creditors and bills payable. Now, what is the balance due after disbursement of rupees 1,000 cash which was available? 9,375, 5,625, 31,000, 20,000 and 6,000. Now, in January 2022, amount realization was rupees 20,000. So from this 20,000, first of all, we are going to distribute the amount to sundry creditors and bills payable. So we are writing the total of these two amount is 15,000. So less 15,000. Here I am writing amount to be distributed to sundry creditors and bills payable. So 9,000. So 9,375 will be paid to sundry creditors and 5,625 will be paid to bills payable. Now surplus, we are having 5,000. Now from this 5,000, first of all, we have to pay the absolute surplus capital that we have computed in table 1. So 1,000 will be paid to partner X. So we are going to disburse rupees 1,000 to partner X. Then balance of rupees 4,000 will be disbursed to X and Y in the ratio of 3:2. That is the revised relative capital which was there, 12,000 and 8,000. So less to be distributed between X and Y in 3 is to 2. So this will be 2,400 and 1,600. And Z will not be paid from this amount. So altogether, the realization of 20,000, which was there in January 2022, so from this 20,000, first 15,000 will be paid to Sunday creditors and bills payable. Then 1,000 will be disbursed to X, and from the remaining 4,000, the amount will be paid to X and Y in 3 is to 2, that is 2,400 and 1,600. So altogether, X will be paid 3,400 from the amount realized in January 2022, and 1,000 will be distributed to Y. So now we have to see what is the balance outstanding after payment of the first realization. So this is the amount or the balance due. So creditors has been fully paid, bills payable, total amount has been paid off. So from 31,000, 3,400 has been paid to X. So 27,600 is the amount due to X. 18,400 is the amount due to Y, and 6,000 is the amount due to Z. Now, in February 2022, amount realized was 21,000. So in February 2022, amount realized was rupees 21,000. So first of all, we have to pay the 16,000 to X and Y, because out of 20,000, this 1,000 has already been paid to X, and from 20,000 which is to be paid to X and Y, 4,000 has been disbursed from the realization made in January 2022. So the remaining amount of 16,000 will be paid to X and Y in the ratio of 3 is to 2. So here I am writing 16,000, amount to be paid to X and Y in 3 is to 2. So 9,600 will be paid to X, and 6,400 will be paid to Y. Then surplus amount after payment of 16,000 is 5,000. Now from this 5,000, X, Y and Z will be paid in the ratio of 3 is to 2 is to 1, that is the PL ratio. So less 5,000 will be paid to be distributed in 3 is to 2 is to 1. So 2,500 will be paid to X, 1,667 will be paid to Y, and 833 will be paid to Z. So you can see here that 12,100 is the amount was paid to X out of realization of 21,000 in February 2022. Then 8,067 is the amount paid to Y from the realization amount of 21,000 to Y, and 833 is the amount paid to Z. Now we have to see what is the balance after disbursement of the realization of 2022 February. So we have to calculate here the balance due. So balance due to X is 15,500. Then 10,333 is the balance due to Y, and 5,167 is the balance due to Z. Now, in March 2022, amount realized was rupees 40,000. Now this amount of 40,000 will be paid to X, Y and Z in the ratio of 3 is to 2 is to 1. So less to be distributed in the ratio of 3:2:1. So 40,000 here we have reduced, and from this 40,000, 20,000 will be paid to X, 13,333 is the amount paid to Y, and 6,667 is the amount paid to Z. So what is the profit from realization? So profit on realization to X is 4,500, 3,000 is the profit of Y, and 1,500 is the profit of Z. So I hope all of you have note down the solution in your notebook, and if you find any difficulty to understand, then you can communicate with me through email, which I have given in the description box. Thank you. Thanks for watching the lecture.